Hello everyone, today is Friday, May 28th, 2021. My name is Evan. Welcome back to our weekly stock market analysis video. If this is your first time joining us, welcome. Thanks for tuning in. Here's how these videos work. We break our analysis up into two parts. In part one, we look at everything that went on this week in markets. We look at performance and correlations, volatility, market internals, credit markets, interest rates, all of the good stuff, and pick apart everything that stands out and looks interesting. And then in part two of this video, we jump into the charts. We put everything into context from part one, and we try and best position ourselves looking ahead. So hopefully that sounds good to you. Let's jump into some of the headlines from this week. First, we have markets closed on Monday for Memorial Day, and thank you everyone who served in the military. Markets will be closed on Monday. Stocks for this past week have really just surged or kind of accelerated their move up. Most of the indices aren't closing back at all-time highs, but they're getting close, and they've got their sights set on it. We're going to talk a little bit more about that in part two. And we've got the VIX retreating all the way back to pretty much multi-month lows. I don't know what the exact figure is. Again, we'll look at that in part two, but it's around 16, and that's quite the deflation out of the balloon from, 30 plus just a couple of weeks ago. So those were some of the big takeaways. Let's look at some of the numbers here. If we look at the right-hand column, this is the 1 week change numbers. So you can see everything was firmly in the green this week. The Dow Jones was lagging on a relative basis, and the Nasdaq and Russell were really the outperformers here, both up over 2%. Notice this 1 month column here. So it's just the Nasdaq now over the past 1 month is still in negative territory. So it's still playing a little bit of catch up, because remember, we had a lot of sort of growth being left for dead again, and the value trade starting to work again. Well, now we're starting to see that heat up in terms of the battle of performance between growth and value. So we're going to keep an eye on that. We're going to talk more about that a little bit later in this video as well. If we look at market internals, here is a very strong week under the market hood. If we look at the top row, we've got NYSE 52-week highs minus lows. Take a look at these numbers here on the week. 788 new 52-week highs made. That's a very strong number. That's a healthy number. That's exactly what we want to see this market do if we are bullish. Second row here is the cumulative AD line, almost 3,000 on the week. Again, a nice healthy number there. And if we look at the percentage of stocks over 20 SMA in the S&P 500, we're sitting around 65%, which is still, room to go to the upside here. We're not totally overbought, stretched, and sort of to the moon in lots of these markets. So there is potentially some more room to that upside. Here is the 52-week highs minus lows graphed. And last week, we started to talk about it. So we were kind of in this zone right in here, if you look at where my cursor is. And we were saying how, the number of highs here are starting to flatten out a little bit. And we wanted to just pay attention to see how that flattening procedure sort of developed, and we sort of got our answer this week. It resolved to the upside. It was a bit of a continuation pattern, so to speak, in the number of stocks hitting 52-week highs. We flatlined for a little bit, maybe got some people worried here, maybe this is the tipping point, but now the bulls are kind of bringing us back here, supporting this market and breaking stocks out to new highs. So that is constructive. That's exactly what you want to see, and we love to monitor this chart in particular. If we look at sector performance here, we had the majority of sectors in the green here, and quite frankly, it's all the sectors you want to see. So we did have, let's start from the bottom. If we're looking at this right row here, we had three sectors in the red. It was consumer staples, healthcare, and utilities. Traditionally, those are the exact sectors you would want to see sort of underperform in your perfect, quote unquote, risk market environment. So the fact that we had consumer discretionary up here, communication services, real estate, I don't know if that's traditionally seen as super exciting in terms of a risk asset, but certainly industrials, technology, financials, these are all things that you want to see kind of outperforming, outpacing some of the more defensive areas of the market. And you did get that basically checks across the board. If we look at correlations here, we see another one of our old favorites starting to develop, and this is a narrative and a discussion that is very much in the front of lots of people's minds, 2021, and it is interest rates and what bonds are doing. So there's a couple of ways to visualize this. If you look at where my cursor is here, the percent TNX, that is the 10-year yield. And so what you're seeing here with these strongly negative inverse correlations to equity markets. So you're basically seeing the interest rates moving in the exact opposite direction. So interest rates up, we're seeing stocks down, interest rates down, stocks up. You can also visualize this on the TLT. So if you look at my cursor here, you can see TLT. Take a look at the first three numbers here, particularly the Nasdaq. If we're looking at the long bond, take a look at its very, very strong 0.93 correlation to NDX right now. So that's telling you that, as TLT finds support, starts to rally a little bit, that's helping, potentially ease off of the technology sort of space. And that makes sense if you're doing sort of, the discounted cash flows into the future and you're thinking about what rates are on a long-term basis. It's exactly what you'd want to see. So those are the two things that are sort of standing out there. I'd say lower interest rates will continue to be a good thing for specifically technology. And if we do want to think about technology coming back into the rotation spotlight for leadership, you'd want to see interest rates continue to fall. That's sort of my takeaway at this. And so far, so good. This week certainly proved it. We'll see what next week brings into the new month. If we look at volatility here, volatility falling quite sharply here across the curve. Take a look at the VIX here. So it looks like, about 16.6 is the final figure I pulled on this particular graph. And you can see that is well below the 20 spot 15 close that we had last week. We still see a pretty steep front month to 3 month curve here. So that is interesting that we're still seeing such steepness, but it is something where, we are kind of in the proper sort of direction or structure for this. And I'd say, while we sit in the teens, that's a good thing for this market to be below 20 and into these teens. If we look at interest rates and credit here, we saw yields falling across the board. So bond prices rallying, yields falling, credit markets here, investment grade bonds not doing a whole lot there, and just kind of normal and expected sort of behavior. If we look at dollar and commodities, it was a very flat week for the dollar. The dollar's been getting pummeled. So the fact that it was flat, we talked about sort of the location of where the dollar is. It's essentially back to year-to-date lows. There's some support there. We sort of expected a bounce. We kind of got the bounce, but it's been weak so far. We're in an overall downtrend, so I'm not so excited on the dollar on a longer-term perspective, but we could certainly bounce a little bit in the short term. We saw gold, silver, Bitcoin, ag, crude oil, natural gas. Everything here was green this week. So everything on the commodity side was enjoying this week, this environment. If we look at the report card, we got check marks across the board. Doesn't happen all that often, but we got green checks there across all of the factors here that we're looking at. Gives us a solid A in terms of the report card for this week. If we finalize things with the trading systems that we're running here, this is how I'm investing my dollars. We've got two trading systems. The top one is called Merlin, and it is a longer term trading system. It is 100% invested in this market. It is full on the market. It's got 43 positions on, so it's got a pretty big portfolio right now, and it's tilted to growth. It's tilted to tech and growth. Not all of its positions are in that sector and in that industry, but a lot of them are, and that's kind of what it's still been doing here. It's had a very strong week this week and a nice sort of rebound, because early in May it was a bit tougher for this strategy to be long, growth and long the market. If you remember, 3 weeks ago it was a little bit different, but it's starting to, really claw back. It's had a great year. Lamerick at the bottom, this is our short-term tactical swing trading system. You can see it's doing the exact opposite right now. It is net short this market across 2 positions. I do believe, I've got to run through our instructions for next week. I do believe we're going to be covering up these shorts on Monday, or I'm sorry, I guess markets close Monday on Tuesday. So I do think we are going to be sort of back to flat. But I've got to run through the reports here after I record this video. I don't know how it's going to shake out, but we have been at least short a little bit this past couple of days, and that might even out heading into next week. So that's the way I'm positioned. If you want to learn more about these trading systems, you can on our website. We post performance reports every single month, show you the trades that they take, and we explain the strategy in more detail on our website. So check it out, thetraderisk.com/systems. You can learn more about these too. And with that, we'll be back in part 2 with just a moment. We are back. We've got Warden TC2000 open. We're looking at our equity market grid. We've got the S&P in the top left, Nasdaq top right, Russell bottom left, ACWX, which is international stocks minus the United States, in the bottom right. We're looking at a custom smart trend filter that we've developed. Those are the multicolored dots you see on the screens. This helps us measure trend and trend strength. Really just helps us determine path of least resistance and sort of where we want to be trading, what direction we want to be trading in, and price itself is the white dashed lines. So this is a weekly time frame we are looking at, and if you recall last week and the past 2 weeks, frankly, we've had some changes here in our weekly outlooks. So not in the S&P 500. So if we look in the top left, you can see that we're still getting green dots printed here. Everything looks very exciting and strong to the upside still in the S&P 500. If we look at the Nasdaq in the top right, notice for the 3rd week now, we've been printing yellow dots here on our weekly trend outlook. So this tells us that, there's a little bit of turbulence. There's some cross currents going on here. Remember, it's not sell everything and head for the hills. That's not what this is telling us at all. It is just telling us that we want to pay a little bit closer attention to what this market's doing on some smaller time frames. Same thing with the Russell 2000 in the bottom left. For the last 3 weeks, we've printing yellow dots here as well. So it's telling us there's some two-way trading kind of going on. There's some cross currents there. If we look at the ACWX in the bottom right, we actually got a bullish resolve this week. So that is constructive. The fact that we were yellow for 2 weeks and now we went back to a green bullish buy signal, essentially, that is a constructive development there for international stocks. So that's the weekly time frame. That's the long-term picture. Let's go down to a daily chart here, and you can see things are a little bit more mixed. So let's start in the S&P top left here. You can see we came into this week with yellow dots here, and we actually got a buy signal printed on Tuesday, right? And you can see that, this doesn't, Tuesday action, we actually closed lower in the market, yet we produced a buy signal for our trend filter. So our trend filter is not just looking at, price itself, or it's not looking at it necessarily in a very traditional sense like lots of others. That's why I like this indicator, because it helps smooth out noise and produces some timely signals at times. So S&P 500 printed that buy signal on Tuesday, and then it was off to the races here Wednesday, Thursday, Friday. Well, I want to say off to the races too big, but it was at least up and still continuing to kind of grind higher here in the S&P 500. In the Nasdaq, we got pretty much the same thing. On Tuesday, we got our buy signal printed, and then we continue to stay above this, and we continue to work higher here in the Nasdaq. So the short-term trends are starting to transition up here, and I'm using short-term as a daily chart, but they're starting to move up. Russell 2000, this has been so choppy here, so choppy for the past 4 weeks. But you can see on Friday, we did print a buy signal here as well for the IWM. It flipped up into bullish, so that's something notable. We're going to look at the price action in just a second. ACWX here was green all week, and it continued to be green all week. So those are the two sort of slices of trend analysis on a long-term and a shorter-term time frame. Let's look at some price action now. Let's take a look at some candlestick charts. and see if we can refine our timing a little bit and just take a little bit closer look at what's been going on. So if we look here at the S&P 500, we've got lots of lines drawn on here. See if we can smooth it out. This is a lot smoother here. This is basically what's going on for the S&P 500. It's a sideways choppy range right now. That's basically the summarization of the past 2 months of trading. You can see we are getting back up towards the upper end. The prior highs here were only, at the highs of Friday's trading, we were only 0.5% from all-time highs. So we're really close and right up in there. And so if we were to switch over to this more busy grid, we basically have some levels we can start paying attention to. We've got a series of shorter term support areas, or 4190. This is where inflection points, I should say, is where the market's cared before. 4170 down in here. You could also, let's clear this back up a little bit. You can also kind of draw this little kind of trend line right in here, this more accelerated kind of slope that we've been grinding in. Now, if I were to look at this over the past 4 days here, this isn't the most exciting pattern to me in the very, very short term. It looks like we're potentially kind of like wedging up here, and we're coming into resistance. We're getting some more topping tails up here, and we're closing the days recently a little bit towards the lows. So this isn't the most exciting, very short-term picture for me. Now, I don't want to turn this into a day trading video, so everyone's looking at this with different time frames. So this could just be noise. We could maybe break down in here, reset a little bit, find a higher low, and then start working higher. To me, hey, that looks constructive, even if we do have to go a little bit lower before we go higher. So keep that in mind. I don't love the way the past 4 candlesticks look here, but we'll see how we open up next week. We are grinding higher, and I think objectively here, we've got some of these levels to pay attention to, and then we have, of course, let's see, I got so many boards here, I apologize. Let's see, where's my nice clean one that I had here? There it is, number 3. You can see here, this is ultimately the noise chop box that we can essentially play around in. So that's the way I'm looking at the S&P 500. Need some more convincing here. Going to need some more momentum. Going to need a pop to get back up over this level and start to break out. That's really what's going to get me excited. Otherwise, I'm going to still be a little kind of cautious here in the short term and think that, we could just chop around a bit more. If we go to the Russell 2000, the chop box here is nothing new. This is really what started going sideways way before the other markets that continues to go sideways here. We are above sort of the midpoint. We are working ourselves higher, but really, I don't want to overanalyze this very choppy mess right now. We're in a sideways range, and that's kind of the way I'm looking at things. Again, if you want to get a little more on the very, very short term, I do like the fact that we sort of broke out from, this little cluster right in here of highs, right? So basically Wednesday's session this week was good for the Russell. That was a nice day to see, especially with what Tuesday looked like. So I think Wednesday was your clue to potentially switch gears to the upside. And then, yeah, maybe you're riding this trend back up towards the upper end of this range, and you're using this, and you're starting to trail up as a stop. Something to consider, some way you could approach this market with some risk management. Last but not least is Nasdaq 100. You can see here Nasdaq is also moving sideways here. This has a slightly different look than some of the other markets here. We had more of a kind of distribution range in here. This is where we went sideways after breaking out. We had this marginal breakout, and then sellers basically just dominated, took us back down. And now you can see again, the market is trying to get back up towards these highs. There's lots of overhead supply right in here, some resistance. So it's at a tough spot. Market's got to prove itself. We got to see those breakouts. Otherwise, I think we're just in risk for more chop, to say the least. So that's the way I'm framing out markets. Hopefully that's helpful. Let's look at some other of the majors here. Let's go to TLT next. So TLT, our call here for the past few weeks is just basically sideways chop. I know that's not an exciting call. It doesn't really get any headlines or clicks, and nobody cares if I say that or not because it's not exciting and doesn't go straight up or straight down. I think people's interest diminishes, but that's still kind of the belief here, and it's been happening and we're seeing it take place. Is just that this range is carving out here, and I think we're probably still in this range for some time. I'm more interested in the fact that it could be a bottoming pattern now, especially after the past couple of weeks here, this drive up. But until we start breaking out over 140, that's kind of the area where I'm thinking, this is still just sideways chop and we're going to have to give it some time. The MACD, our momentum oscillator up here, it does want to get going to the upside. It wants to try and jump and move up, but we, are going to need price to actually do that. So that's kind of what we're waiting on there. I did mention the VIX earlier. I want to touch on that. So here's the VIX. Yeah, so it didn't quite close at the lows of today, but it did close. Yeah, the lows of today were 1590, which would have almost been multi-month closing lows for sure. But, the S&P, the VIX here has really been, essentially cut in half. I mean, if we're taking it from, or seeing a 43% drawdown. I mean, especially at the lows of today, it was 45% drawdown from the 28 VIX. I think I said VIX was over 30 earlier, so I definitely misspoke there. But we got as high as about 29 on the VIX, and it's come pretty far pretty fast. So, when you think about the short-term movement here, and again, that's why I don't want to turn into a day trading video, but, essentially here, you got this VIX kind of hammering out. It just got cut in half. You've got the SPY here with some weak kind of top heavy closes. We're coming back into resistance. It's very plausible to just see a little bit of a shakeout here, is to see the market kind of pull back 1.5%, whatever it is. And then, the VIX pop back up to, let's call it 18, 19, 20 even. And then, that puts in a higher low in VIX, and then, markets can move higher. Again, just a single path, not saying that has to happen, helping everyone sort of keep an open mind. If we look at gold continues to move higher here. Remember, our expectations were back in this dot. We were saying, hey, you got to be a little cautious here in GLD as it kind of gets back up to the top end of this channel, and it looks something like potentially these past peaks. That didn't happen. And, the market continued to kind of keep moving here. And so it's grinding away. It's forcing people to chase right now. Consecutive green bars coming in. Looks like a breakout in motion here now when you're starting to look at a longer term chart. So GLD, I don't have any particular setup to chase this right now myself, but if you're long it, congrats for you, and, manage that risk and just think about, where you're wrong and how you're going to get off the roller coaster if it goes the other way. But right now it looks good. Buyers in control. And that brings me to silver, which hasn't gotten a breakout yet. But this pattern here is a little more interesting to me. And even, you can look at this on pretty much all time frames. Look at this monthly chart. This monthly chart of silver looks pretty exciting when you think about this huge move off of the first quarter lows all the way up to 28. And then it just consolidated in the top 20% of this rip. And now we're coming back up towards highs. MACD still looks strong. Longer term perspective here for SLV, this looks pretty exciting. And it looks like, again, this is a monthly chart, but this is implying, a move back up to 48 here and retest the old silver highs. It's not going to do that in a straight line. It could take 12, 24 months, but that's what it's implying here on a long-term basis if we can start to break out and head higher over, this $27 area. So it looks interesting. Daily chart still kind of moving sideways here. Going to need to see that break out over 26, 27. All right, let's finish off with some sectors and industries that are notable. So we've got our little list here. We've got 17 sectors and industries that I've identified here with some custom scans on being a little bit interesting. Let's take a look at them. First is oil and gas refining. So this one here is really hitting the scan because of the heavy volume that came in. Did get a strong close near highs, but oil and gas there. And if we look at our second one, it's another oil and gas E&P. You can see also, kind of closing up here at new all-time high, not all-time, but new multi-year highs for this particular E&P industry. Next up, we look at communication equipment. This is also hitting the radar here, closing at new highs. So when you think about this, it looks a little marginal, but, notice we talked about the S&P, the IWM, the Qs. None of them are breaking out to new highs yet. So I'm showing you right now some sectors and industries that are closing at new highs. So we get some marginal sort of leadership, so to speak. Electronic components. Take a look at this one here. This is an interesting one where we have a very tight sideways range that we've gone essentially nowhere, and now we're starting to break out. Let's take a look at some of the stocks that make this up. There's 80 names in this list, so there's quite a bit of different variety in this list. It's not a small index. So that's an interesting one there. Leisure also here. So breaking out again, nice strong close after some consolidation. I'm going to speed up because there's a bunch. Aerospace and defense. Whoops, let's fix that. Aerospace and defense. We got REITs. We got financial services. We've got broadcasting. We've got more financial services. We've got more REITs, real estate, pollution and treatment controls, industrial sector here breaking out to new highs, textile manufacturing breaking out to new highs. It's a great looking pattern here. Didn't give anything back, and now it's just marching higher. So that's what's working. Let's look at our bearish of interest. What's not working here is data storage. Take a look at this. Totally different chart. Totally different chart here where this is breaking down, heavy volume, and maybe it's not truly breaking down yet. Maybe it's just falling back to the low end of the range, but still certainly much different view than all of the 17 we just looked at above. We got a few that are moving sideways here. What are they? Let's see. So this one's actually hitting our sideways scan as well. So that's why I say it's not quite breaking down yet, but it is moving to the low end of the range. And then last but not least, semiconductors here hitting our consolidation sort of scan or conditions that we have set up here. So keep an eye on this one as this starts to put in a follow through week. Looks like it wants to head back up towards those highs. So that is it. That's what I got for this week's video. It's a long weekend. So leave a comment. Let me know what you are looking at heading into next week. Anything that I missed, anything you disagree with, leave a comment below. I'd love to know what you're looking at. As always, I want to thank you for tuning in. Every Friday, we do our long form videos just like this, keeps you up to date with what's going on. Hopefully it prepares you for the week ahead. Thanks as always for tuning in and watching, and we'll see you back here next week.